James Harris Simons, known as Jim Simons, was an American mathematician, billionaire hedge fund manager, and philanthropist. He was born in Newton, Massachusetts, on April 25, 1938. Showing an early affinity for mathematics, he earned an undergraduate degree in mathematics from the Massachusetts Institute of Technology in 1958 and a doctorate in math from the University of California, Berkeley in 1961, at the age of 23. His thesis focused on differential geometry. After earning his doctorate, Simons briefly taught at MIT and Harvard University before joining the Institute for Defense Analysis in Princeton, New Jersey. There, he worked as a codebreaker for the National Security Agency. However, he was dismissed from the institute in 1968 due to his public opposition to the Vietnam War. Following his dismissal, Simons received an offer to head the mathematics department at Stony Brook University. There, he established the department's distinguished reputation and continued to pursue his mathematical research. He collaborated most notably with Shen Chern. In 1982, Simons founded Renaissance Technologies, a hedge fund company that is known for its secretive and wildly profitable Medallion Fund. He is seen as the greatest investor on Wall Street. Renaissance Technologies achieved high returns through a unique and systematic approach to investing. Here are some key points. 1. Quantitative investing. The firm heavily relies on mathematical and statistical methods for making investments. They exploit different market patterns, sequences, relationships, and anomalies. 2. Highly skilled team. The team consists mostly of PhD scientists from various fields such as mathematics, pure and experimental physicists, computer scientists, and astronomers. 3. The Medallion Fund. Launched in 1988, the Medallion Fund is known for achieving the best continuous returns in history. From 1994 through 2014, it generated an average annual return of 71.8%. The fund uses high-frequency trading, taking advantage of the inefficiencies in the stock market. 4. Use of mathematical models. The fund applies an enhanced form of Leonard Baum's mathematical models, improved and adapted by James Axe to research correlations. 5. Data analysis. The firm breaks down historical data into tiny fragments, tirelessly vets them for potential opportunities, backtests them, and then applies them to emerging trends to verify usability. Please note that while these strategies have been incredibly successful for Renaissance Technologies, they involve complex mathematical models and require a deep understanding of the financial markets. Investing always carries risk, and past performance is not indicative of future results. It's important to do thorough research and consider seeking advice from financial advisors before making investment decisions. The Medallion Fund has an impressive track record. Here are some key points. 1. Exceptional returns asterisk. The fund has returned more than 66% annualized before fees and 39% after fees over a 30-year span from 1988 to 2018. 2. Profitable fund. It has made over $100 billion for its owners from 1988 until 2018. 3. High growth rate. The fund reportedly grew at a compound annual growth rate of 62% between 1988 and 2021, or a 37% annualized rate after the hefty fund management fees. 4. Record-breaking year. In 2000, the Medallion Fund generated its highest return ever of 98.5%. Please note that past performance is not indicative of future results. The Medallion Fund stopped accepting new money due to several reasons. 1. Limited capacity. The fund realized that there were limits on how much it could manage without significantly impacting market prices. This is a common issue for many hedge funds. As they grow larger, it becomes more difficult to achieve the same level of returns without affecting market prices. 2. Internal focus. In 2006, the company returned the investments of outside investors, so that the fund's only shareholders are the employees of the company. This decision was likely made to align the interests of the fund's managers with its performance. 3. Performance concerns. There were years when the fund's performance was not up to the mark, leading investors to withdraw their money. This could have contributed to the decision to stop accepting new investments. 4. Regulatory scrutiny. Being too successful can attract regulatory attention. The U.S. Securities and Exchange Commission studied Renaissance after a major scandal in the financial industry. While they didn't find anything wrong, the scrutiny could have influenced the decision to limit the fund's size. The specifics of why the Medallion Fund stopped taking new money are not publicly disclosed, and the reasons listed above are based on industry knowledge and speculation. The actual reasons could be different or more complex. It's always important to do thorough research and consider seeking advice from financial advisors before making investment decisions. Later in life, Simons turned his focus toward making a difference in the world, with far-reaching philanthropic investments through the Simons Foundation. Among his many accomplishments as a philanthropist, Jim, along with his wife, Marilyn, established the Simons Institute for the Theory of Computing at UC Berkeley. Jim Simons passed away on May 10, 2024. His legacy in mathematics, investment, and philanthropy continues to be felt and will be remembered for generations.